Today we're going to talk about the power of accumulated cash value in a whole life insurance policy and why you might want to consider this as a part of your financial strategy. So just exactly what is cash value? Now, cash value is a feature of whole life policies that allows you to accumulate a pool of capital or money that can be accessed in times of financial need or opportunity. This pool of money gives you greater control over your financial life. We refer to it as having liquidity, use, and control of your savings. So why do the wealthy position so much of their money in whole life insurance policies? To begin with, they understand the value of liquidity, use, and control, meaning when the need or opportunity arises, they want to be able to transact business quickly. And in the meantime, they want their money to be growing without risk of loss in a tax-advantaged environment, meaning free from income taxation. So the wealthy also understand the value of passing their money on to the next generation without it being taxed. They spend a lot of money in creating tax-free transfers to their heirs. And all the money or cash value inside a whole life insurance policy and the death benefit that is included with that pass directly to heirs without any income tax liability. So when you make a payment known as a premium on your whole life policy, part of the payment goes towards the cost of insurance. Now, after the insurance cost is subtracted, the remainder goes into what is called a cash value account. And to be clear, there's ways to structure or design whole life policies that significantly minimize the cost of insurance. You can get that cost way down so that your policy develops cash much faster and makes it a much more beneficial process for you, which earns a guaranteed interest over time. And the policies that we recommend also may pay a tax-free dividend in addition to the guaranteed cash value growth, making the account value grow even faster. Now, by the way, that dividend is also free from taxation. So you're going to begin to understand that there's a lot of benefits in terms of tax savings and tax protection inside these very specially designed insurance contracts. Now, the longer you hold the policy, the more efficient your policy becomes. And what that means is the faster your cash values grow. There are specific ways that a whole life policy can be structured, designed to provide you with maximum cash value growth as well as very favorable tax advantages. So the cash value is the amount of money that you have access to during your lifetime. And there's a couple of ways that you can get it out of a policy. One of the ways is to withdraw it. But another way that actually it may not make sense to begin with, but we'll explain to you why you would want to borrow against your cash value. There's some very unique reasons that you may want to use your cash value as collateral and therefore take a loan against it. And that is something that we're not going to cover today, but if you'd like to know more, we have in our educational video library, we have videos that explain that. Now, in addition to the tax-favored growth of the cash values, whole life policies have a tax-free death benefit, which is called the face amount. And this face amount can provide much needed money in the event of your death to your loved ones at a time when they may need money the very most. When you borrow or withdraw against cash values, though, you do reduce the death benefit. So, for example, if you have a policy with a $500,000 face amount or death benefit, but you had taken $100,000 out of the cash value account and you passed away, your beneficiaries would receive the $500,000 minus the $100,000 that you'd taken out, or the difference of $400,000. Now, if you've read my book, Financial Certainty for Life, you know that I talk about liquidity, use, control, and creating financial certainty. And these are all things that you should want to have with your savings or investments. And the cash value in a policy provides you all of those. It provides you the liquidity, the use, the control, the certainty that you need, the protections that you need. In many states, for example, cash values are actually protected from lawsuit, which CDs are not, and many of the other assets that you might have. If you got sued, you could lose those assets with the money inside of an insurance contract. Those are protected, like say in most states, about 38 or 39 of the 50 states. By the way, if you haven't read my book, take a minute, jump over to strategicwealthbuilder.com and grab your free copy so you can learn the secrets to creating financial certainty even during challenging economic times like we're experiencing right now. What can you do with these cash values in your policies? The possibilities are really endless, but here's some of the common uses. One might be to fund a future college education. Another use would be financing cars, boats, or RVs. In other words, paying cash for them, but borrowing against your cash values. You could finance a business opportunity. You could even pay for a wedding or unexpected expenses from emergencies or accidents, something that you didn't anticipate. You could use it to help acquire a home or even a rental property. In fact, utilizing cash values to secure, as part of a down payment, to secure a rental property can really enhance the rate of return that you're getting on those dollars. And then last but not least, and then there's actually plenty more, but supplementing your retirement income. When you start withdrawing money from your cash values, that can supplement your retirement income with tax-free income. And there's many, many benefits to having part or all of your income be completely free of taxation. As we work with you, we will show you why you want to have as much of your future income, particularly your retirement income, free from income tax, because there's so many additional benefits that we would share with you. And again, storing a portion of your assets in cash value or the cash value of your insurance policy has tremendous advantages. Here's just a few. First off, you have guaranteed growth on your cash value account. That's something that a lot of places you put your money don't guarantee the growth. In fact, you could actually not only might you not have an increase or growth on the account, you could actually lose money, such as in the stock market, mutual funds, your 401k, your IRA. And you could access the cash value without penalty or tax liability. Think about your 401k. The only way you can get money out of that is to pull the money out and pay the tax on it. And if you're younger than 59 and a half, you may have an additional tax or a penalty of 10%. Now, there's a provision in 401ks that you can actually borrow money from the 401k, but you must put it back. If you don't, your tax will pay the penalty. But you must pay it back. You must pay it back over 60 months, and you must pay it back with an interest rate that the IRS sets. Now, that interest rate is not too high, and the money does go back into your account, but there's some drawbacks to borrowing against your 401k. And again, if you choose to connect with us, we'd be happy to show you the pros and cons, the advantages and the disadvantages of accessing cash in your 401k. But if you've got money in an IRA, for example, you can't even do that. So the only way you can get money out of your IRA is to pay the tax on it. Or if you're less than 59 and a half, younger than 59 and a half, you must pay the tax and a 10% penalty. That could get very expensive, and that's not a wise thing to do. So we show you how to build up cash value that is readily accessible without restriction, without penalties in your cash value life insurance. Now, we've already talked about this, borrowing against the cash value and borrowing at a lower interest rate than, say, traditional loans or credit cards. And you don't have to qualify. I mentioned that before. You don't have to qualify for these. Was working recently with a client who had just done a $50,000 remodel on their home. They put it all on credit cards, or it was financed through a home equity line. As it turns out, the average interest rate that they were paying was well over 18%. And after sharing with them how this concept worked and re-educating them as to how and why they had done what they had done for me, in other words, they had put a lot of money into a very specifically structured whole life policy that would maximize the amount of cash that they were going to have available. They had enough money in their account to pull the money out, borrow it against their cash values at 5%, and replace a $50,000 credit card bill at 18% with 5%. Oh, and by the way, when they pay the interest to the insurance company, ultimately that, through a kind of a trickle-down process, that money ends up back into their policy. Again, that's another conversation that we could have, helping you understand how powerful having this liquidity use and control over your finances can become in the future. So, as you can see, cash value is an important feature of whole life insurance policies that can provide you with a variety of benefits. As Strategic Wealth Builder, we're here to help you navigate the world of financial planning and life insurance by making informed decisions for your financial future. So take a minute, contact us today to to learn more about how a properly structured whole life policy designed for maximum cash value growth can help you achieve your financial goals while at the same time protecting your assets and helping you create financial certainty.